Hi everyone, Donna here with Bookkeeping Made Simple, and today we're going to touch on a rather boring subject, which I apologize for, but it is important, so I want to make sure you know about it. And that is the chart of accounts. This is the Bookkeeping Made Simple podcast, and this is where we talk about all things to do with business. Remember, business is simply math done for profit in the end. So I want to talk about the chart of accounts and why it's important to keep a consistent chart of accounts throughout your business and throughout all the businesses you own. Some people own more than one, and that's one of the reasons this came up. So if you thought that having a chart of accounts, well, before I get started, on this podcast, we talk about everything to do with business with an emphasis on accounting because that is the field that I'm in. And that means I talk about mindset. I talk about new laws that are coming up. I talk about anything that I see or hear about or learn about. Personal development is a huge one that will help you grow your business. Of course, accounting is my wheelhouse, so that's really where I put my emphasis. And with that, I understand this is not a topic that most people enjoy, and it is considered to be boring. I don't find it that way. So I'm going to try to include my enthusiasm for accounting in these podcasts. And I want you to, even if you don't like doing the bookkeeping or accounting, I want you to really get enthusiastic about being able to read your reports and understanding how your business is doing. And that's part of the reason I do these videos. If you enjoy these videos, I try to make them as entertaining as I possibly can. Please like, share, and subscribe. We are on Spotify, YouTube, Google Podcasts, and some other platforms. So please like, share, and subscribe. That is how we grow our channel. I do try to put out lots of good quality content on a lot of items that I think are important for small business owners to know. Even if you don't need to know how to do them yourself, you need to know how to utilize them. And that's really the important part. And with that, we're going to dive into the chart of accounts. Deep breath. Okay. This is not the most interesting subject in the world, and I don't know how I'm going to make it that way, but it is important. The chart of accounts is the framework on which all of your financial reporting hinges. It is important to have it consistent across the board. And by that, I mean you need to have it consistent across your businesses, but also across your industry. So if you're in the trucking industry, you should have a chart of accounts that's pretty similar to your competitors. If you are in the medical field, you need to have a chart of accounts that's pretty similar to your competitors. And I'm going to go over the reasons for that. One is you're going to have to benchmark. You are also going to have to share these reports probably with investors and creditors who are also going to benchmark against your industry. And they need to have a consistent framework to be able to identify if there are problems in your financial reporting, if there's specific categories that are wildly out of line. It's hard to tell if they're being labeled different things and they're in different places. It becomes more difficult to tell what this money is for. So we want to make sure that your financial reports are clear, concise, and understandable. So one, you are going to have to benchmark. And by that, it means you're going to compare your financial statements to your competitors, one way or another. Okay. I'm a very private person, so I don't really like doing that, but I also am aware that that is how you know if your business is growing or not compared to other businesses in your field. Also, if you go to get a bank loan, or if you're trying to attract investors to your business, it will become necessary to benchmark your financial performance against others in your industry. The easiest way to do that is to make sure that your chart of accounts is consistent across your industry. In specific industries, we call your revenue account a specific thing. So, for example, We have behavioral health clients. We call their income account fee for service income. For trucking accounts, we have a gross trucking income. For others, we may just call it sales, but we also want to make sure that that is consistent, and that if we have just a sales category, we don't need a sales of product category, because that confuses things. We want to make sure, again, that these are consistent across the industry. This allows you to make data-driven decisions, and it allows you to compare your business to other businesses and to see how well you're doing compared to your competitors. When you go to apply for a loan or you're trying to attract investors, they're also going to benchmark your business against other businesses in your field. So if you are seeking mentorship in your field, they're going to benchmark you against your competitors, and especially the most successful competitors. So they're going to look at highly successful businesses in your field, and then they're going to look at your financial statements. They're going to compare them, and that's where they can start to teach you how to recreate those results. If you have multiple divisions or you have subsidiaries, you have multiple businesses, we also want to have that consistent chart of accounts. And for that is because when you brain work when you consolidate your financial statements. Consolidation is the process of taking financial statements from multiple businesses and pulling them together into a single one. In order to do that accurately, we need to know that the names for those buckets, those categories, remain pretty close to the same across all the categories. When you make them very granular, so if you are breaking out by vendor, which I've seen a lot of clients do, they have it by vendor on their chart of accounts, that then makes it much more difficult, not impossible, but it becomes more difficult to create a consistent consolidated financial statement. Doesn't make it impossible, but it does make it harder. And if you're paying an accountant to do that, it's also going to make it more expensive. When you are receiving coaching or mentorship, they also want to make sure that they understand what's going on in your business so that they can benchmark you against your competitors and also against your historical data. I have seen clients, they will be in business for several years and they will call a category, I don't know, meals and entertainment. And then all of a sudden, they're going to break out meals and entertainment, or they'll still have meals and entertainment, but they'll create a separate entertainment category and they'll start putting things in there. That's correct, but it also creates headaches when we're trying to compare those financials against or consolidate them with other financials, because now or do historical reports, because now we have to go back in and separate out what was entertainment in the past so that we can compare it to entertainment now and forecast for the future. So it just creates a lot more work for your accountant. None of this is insurmountable, but it does create more work. Another reason to make sure that your financial reports or your chart of accounts stays consistent across your industry is if you're doing mergers and acquisitions. Now, if you are an 80s child, you may think of Pretty Woman and really high-powered mergers and acquisitions. That's not at all the case. That just happens when you buy another business. So I'm personally looking for an accounting firm to purchase, and that means that I need to make sure my chart of accounts and their chart of accounts are comparable, because I want to see how they're doing compared to how I'm doing, so that when I go to consolidate those in the future, then I can do that very, very easily without having to go back in, pull out certain transactions, disallow certain things. It's really important to have these naming conventions the same, and the categories, the transactions that are put into these categories consistent. Another reason, this is the reason people are thinking at this time of year, tax time. When we prepare taxes for businesses, we do look at the chart of accounts. We do pull up the profit and loss in the balance sheet is the very first thing we look at, particularly the profit and loss. And then we have to see how it matches to the chart of accounts that basically the IRS has already mapped for us. We do not want to make a whole lot of changes along the way. We want to make sure that those are comparable, and that that way when we enter everything into our tax software, we go to compare, we look at it. We don't want too many random extra things in there. You know why? Because the IRS is going to benchmark against other businesses. There is such a thing as, it's called a NAICS code that you put on your tax return that tells the IRS what category your business is in. They're going to compare your tax returns to other businesses in that category to see if your ratios are correct, to see if anything's wildly out of line, to see if you are claiming deductions maybe you shouldn't. So we want to make sure that we are keeping the chart of accounts consistent with what the IRS wants. This is going to help with tax preparation, which will save you money. It's also going to help keep you audit proof, which we also will save you money. We don't want the taxing authorities to come in and audit you if we can help it. It also means that there's going to be fewer errors. Now, I've talked about financial reporting, I've talked about taxes and audits a little bit, but I also want to talk about from our perspective as accountants. We have had clients with massive, very imaginative charts of accounts, and that's great. There's certain people are certainly within their right to do that, but it makes our job as accountants harder as we're entering these day-to-day transactions for our bookkeepers. We want to make sure that those charts of accounts stay the same and are consistent throughout, because it is time consuming to go back through and try to figure out what category you've named meals and entertainment, or what category you've named office supplies. We want those to be consistent, and we want the naming conventions to remain the same, because we want to be able to do your books quickly, efficiently, and accurately. And if you get imaginative in your chart of accounts or too granular, it can become challenging. Historical data. I touched on this a minute ago, but I want to kind of dive into it a little bit deeper. At the end of the year, and ideally even at the end of every month or the beginning of the following month, you should be looking at your financial statements and looking to see how your performance compared to previous periods. I do this at the end of the year, beginning of the year. I compare the previous, so right now I'm comparing my 2023 performance to 2022's. And I may even compare 2023's and break it up by year and see how I've grown or shrunk over the years. That's an important thing to know, because that allows me to set sales goals for each month by comparing to what I've already done. I want to grow a certain percent every month. And so that means that I have to have a certain amount of sales, and that means that I have to do a certain amount of work. And that allows me to kind of reverse engineer it and figure out exactly what I have to do every day to bring more people in the door to serve. In order to do that, I have to have good historical data. I also may need to look and see, where do I need to cut back on spending? So if I'm looking and I see that meals and entertainment is a huge one, by the way, my meals and entertainment expense is out of control, or payroll is another big one. That's usually most businesses, payroll is the highest expense. We want to look and see, how does your payroll stack up over time? And how does it stack up to your competitors? That may tell us that maybe you need to lay off. Maybe you need to hire more staff. Maybe you have some room to pay your existing staff more money. Or maybe you need to make some cutbacks. But that, in order to make those decisions, you have to have accurate data, having a consistent chart of accounts. And by consistent, I mean not just consistent for you, but consistent across your industry, across all businesses. You need to have those reasonably consistent. And I will insert this disclaimer. Every business is a little bit different, and every business owner has different things that they really want to see on that chart of accounts. But we want to make sure that the overarching structure remains fairly consistent so that it is easy on the accountant and it's easy on the business owner, and the historical data remains relevant. So the historical data is really important for long-term planning, which I am going to talk about really in another video. And then also understand that almost every single accounting software has a built-in chart of accounts. We are QuickBooks Elite Level Pro Advisors. All of our clients are required to be on QuickBooks Online to make it easy for us, to be honest. It's easiest for us for a lot of reasons, which I will cover, I think, in a later video. I am not a salesperson for Intuit. That just happens to be the structure that we use in this business because it's easiest for us. But Intuit or QuickBooks has a pre-existing chart of accounts that's just what they create, that is kind of built in, and that's the structure that we tend to use. This makes it easy for us to go in, and we can tweak it, and we do, but we also want to make sure that these categories are named the same across all of our clients so that when we go to do the books, we're naming them consistently and we're not making mistakes. And by mistakes, typos can throw in a new category all of a sudden. If we have to go in and redo the chart of accounts, that's going to cost our clients more money, and we don't want to do that. So having a consistent chart of accounts is important. While you can have some custom configuration, by the way, this is also important. We do accounting for franchisees. One of the things a franchisor does, very first thing out of the bat, is they will give you a chart of accounts that you have to follow. And the reason is consolidation. When their accountants sit down to figure out how that company has done overall, they may have thousands of locations and thousands of franchisees that they need to consolidate to show, to file for their 10K. That is the form. Yes, the 10K, which is the annual report that must be submitted to the SEC if you're publicly traded. When they do that, they do not want to pay accountants to go through and try to scrub charts of accounts for thousands of franchisees. So they do give you a chart of accounts that you're required to use. And if you're a franchisee, we will use that chart of accounts. We want to make sure that we're making things as easy for the franchisor as possible, because that will help you in the long run. So again, why have a chart of accounts that's consistent with your competitors? Why have a chart of accounts that's consistent across industries? Reason number one, it's easy to compare your performance to other businesses. Reason number two, makes it easier to do your taxes. And it makes your taxes less susceptible to audit. In the event of an audit, it makes the auditors much happier to be able to compare within your industry. And finally, most importantly, it allows you, the business owner, to make data-driven decisions, which is critical. They may not be the right decisions, but they should be informed decisions. Everyone makes mistakes, but they absolutely should be informed decisions. It's much harder to make good decisions for your business if you're guessing. So we want to make sure that you have the appropriate data that you need to make informed decisions about your business. Can't do that if the charts of accounts are all over the place, and you cannot compare anything if you're comparing apples to oranges. So with that said, I'm going to go ahead and end this podcast. This is a short, sweet one. I will talk to you really soon. And again, if you like this, and I do try to make them entertaining because I realize accounting is not most business owners' favorite thing to do, but you have to understand it. So I try to make it as entertaining as I can. I've gone through a lot of college classes where the instructors made it sound like watching paint dry, and I try not to do that. So I'm trying to keep this as relevant to you as possible. If you have any questions or comments, or you would like Bookkeeping Made Simple to do your books, please feel free to reach out to me. My contact information is in the description below on both the podcast and the video on YouTube. And you can find out more at mysimplebookkeeping.com. Thanks, and I will talk to you again very soon.